Hello, everyone. I'd like to welcome Hans to today's expert speak. Thanks to the team at GGV Capital for helping us put together. I'll start with an introduction for Hans. He's the managing partner at GGV Capital. He's a rare international investor with investments in countries ranging from China to India to the US. He's been named to the Forbes Midas list 9 consecutive years in a row, and the New York Times CB Insights Top 100 Venture Capitalist list 4 times from 2016 to 2019. His portfolio includes 18 investments valued more than $1 billion, many of them invested at an early stage. His investments include household names like Affirm, Coinbase, Xiaomi when it was at 20 million pre-money. And in India, he's invested in Rupeek, Udaan, Turtlemint, and he's active in the fintech space. Hans, welcome to the discussion.
Adhil, it's very nice to meet you.
So Hans, you're passionate about identifying market inflection points and consumer shifts. It appears that in this pandemic, right, consumers are shifting. In India, what I see is in the financial space, consumers are going digital for all things financial. Talk to us about identifying consumer shifts. How does one get that right?
That's a great question. Not as many people in the West ask me about that. And the reason I like that question is that it's having gone to Stanford as a Taiwanese American. The things that we learn at Stanford is, you make things happen, you disrupt things, you create the future. Whereas when I was working in Asia, you learn you got to ride the wave, find the trends, and it was spending more time thinking about what's coming out next. And I do a lot of sort of thinking or reading on demographic shifts. So in the US, the reason why Stanford can rise was because baby boomers won't buy more things for the home, including personal computers. If it wasn't that baby boomer spending wave, just because you have an amazing Apple IIe, it will take time for the adoption to happen. And with Asia, you see urbanization, you see rise of the middle class, and you see people craving for internet access that allow the rise of mobile phones, smartphones to emerge. So this is why iPhone costs a lot, but in around the world, emerging markets, much lower price point, mass market Android phones have a possibility. So even though investing in Xiaomi from day one was an extremely hard decision, because in the history of technology development, no startup has ever made a phone company work. Everybody is transitioning from something else, including like Nokia and Ericsson back in the day. So and even Motorola. So it's when you find the right shift, you find that the trend rising, you find that demographic shift that allows more possibilities. Then it's easier to look at it. And it's not just a lesson for developing markets only. When I was looking at Peloton, colleagues, other people asked me, why would you want to invest in a company that sell bikes for 2,000 when you can buy in the market for less than 1,000? That doesn't make any sense. Hardware will get commoditized over time. And that's true for the most part. But what people don't realize is that with the rise of buy now, pay later, like Affirm, which work closely with Peloton, the $2,000 bike costs as a relative term, costs about $50 to $100 per month, depending on if you have someone to split it with, and it depends on if you buy the subscription as well. And you do that for 36 months, and that bike is yours. And so there are ways to drive that price point affordability to a more mass market level, yet the experience is one of affordable luxury. So that was the trend I was looking at. That was what I was focusing on. I see that as a way to substitute gym membership, which costs about the same amount of money, but the experience is a lot less satisfactory. The timing is not as easy for someone who has a busy schedule living in urban cities or even suburbs with a lot of kids' activities. So if you look at those demographic shifts, demographic trends, and how consumer behavior are shifting what they're looking for, something more personalized, something everywhere, something is fits their schedule, fragmentation of time much better. It's easier for you to make bets on the ecosystem. And so I think Wellington and GGV are the only two funds that invest in both Peloton and the firm for exactly that reason. You're riding that wave of trend, that ecosystem emerging, helping each other take advantage of that trend.
Yeah, fantastic answer, Hans. And is the pandemic accelerating that? The reason I ask is, I see with Bank Bazaar in India, one side is consumers want things digitally. They don't want to meet a lender or a banker or hand over papers. But banks also realize that they need to use data better. They need to use alternate data points, credit scores better. And the regulator wants it to happen. So is the pandemic creating a faster shift than you saw in the last decade?
That's a great point. Again, great questions. Yes, we definitely see COVID is terrible for many people around the world, many countries around the world, for sure. It has been a huge boom and accelerator for tech. We're seeing that offline economy, because it's shut down, everyone's adopting mobile technology at a much faster rate. And because affordability of smartphone, smart devices connected to the internet is much more readily available than ever, it's easier for people to work from home on a relative basis and work remotely than versus 5 years ago, 10 years ago. And as a result of that, we do see faster adoption, not only by startups, but also incumbents. We spoke to the chief innovation officer of 4 of the top 6 banks in the US. And every single one of them knows the issues, and they're doing what they can to improve their services, to be able to roll out new changes more quickly than ever. That's why you see Blend going public in the US and working with incumbents to provide mortgage loans much more efficiently than before, riding a wave of demographic shift of people moving from big cities to smaller places, and also from bi-coastal areas into the southeast, southwest part of the United States. So you do see that happening in developed country. In developed country too, India, as you mentioned, we're investor in both Turtlement and Rupeek. Both of them have worked with financial institutions in India closely. And then both of them have grown during COVID.
Yeah, that's clearly something we see at Bank Bazaar too, because before the lockdown, every transaction required a meeting, but today 80% is on video KYC without a meeting. Now, when this consumer shift happens, Hans, do you think it's more about collaboration between existing banks and large financial institutions and fintechs, or do you feel they're competing with each other in order to capture this consumer shift?
Yeah. Again, how do you work together or against each other is another good question. It all depends on the attitude of incumbents. In different parts in the West, you see that startups happening starting at an earlier period. So there's no playbook on how to work together. It's harder for incumbents to feel that they should work with somebody who's a lot smaller than they are. So when fintech first started as an investment category at the beginning of this decade, most banks assume that they can just buy the startups as they get bigger. It was only the last 3 years when you see Robinhood going public and coming up, Chime and Brex, and then before that, Square and PayPal doing well. That then you start taking them seriously as the acquirer, not as the acquiree. And so it really depends on the attitude of incumbents. So having global viewpoint, like the show you're doing, sharing global insights in what's happening around the world, hopefully offers incumbents in developing markets more evidence to it makes sense for them to collaborate rather than fight against the startups, because startups have actually they're more nimble. They can try things faster. They can iterate faster. They can roll out what products, know what will work faster, sooner. That internet speed, clock speed, give them a huge advantage to compete in a new environment.
Yeah, absolutely. I've noticed in the last year, and we've launched, for example, co-brand products with large banks, that the openness to collaborate is much, much more now than it was 3 years ago. Is that something, you have a global view? Is that something you're seeing around the world in fintech and banking?
Absolutely. We're seeing that in the US, like I said, also happening in some of the other countries, whether it's Europe and other places. But for emerging markets, I think that information flow is speeding up. Some are adjusting, some are still taking more time, but I expect that over the next 12 to 24 months, almost every incumbent need to figure out a way to collaborate, or else their competitors who do, their peers who do, will end up beating them.
Great point. Great point. Now, Hans, you've seen startups grow all the way to IPO. You're one of those rare international investors who personally led bets, right, across the world, worked in China, worked in US, now actively investing in India and Southeast Asia. Now, does that kind of insight, right, multi-geography insight, help your businesses from the GGV Capital perspective?
It definitely has. I think I was inspired by the model that, for example, Tiger Global has been an active investor in India. I've known Scott and Chase for almost a decade now, and seeing how they're structured as a crossover fund, both public and private, in increasingly earlier stage, you just have a lot more data points across the board as a multi-stage, multinational investor. So the knowledge you pick up on one market, you can quickly understand what is specifically local and what is applicable on a more global basis. So you from the rise of the sort of food delivery company, you see Dianping, you see Meituan merging in China, ends up becoming a massive player. Then you in Latin see Rappi and iFood. In India, obviously you know Swiggy and Zomato. Zomato had a very successful IPO. Congrats to them. Then in Southeast Asia, Grab and others. So you see, even taking food delivery as a category, you do see these things happen. And even in the US, you have Uber versus DoorDash. DoorDash is a pure food delivery play. Uber coming from ride sharing, expanding into food delivery. And today, the market cap of DoorDash has surpassed Uber. It's very interesting how time and time again we see the sort of replay of Google versus Yahoo. And you see iPhone versus iOS versus Android. So lots of competing platforms competing with each other, which is great for the ecosystem and great for founders to continue to be able to innovate and come up with new categories to take on.
Right. Sequoia Capital is an investor in Bank Bazaar, and obviously, that gives access to a global portfolio. But I think what's really unique about what you're saying is you personally invested around the world. So it's not like a different team. You've actually done this all over. That must be an interesting view on how things are developing. Do you see a lot of similarities which, other people can learn in terms of best practices across markets?
That's a very astute observation. Historically, up until the last 10 years, in the first 30, 40 years of sort of institutionalized venture capital, most of the funds are organized on geography basis, country by country. And that worked well when everybody would just try to catch on and try to do their thing to grow. But increasingly, as users start solving problems that are more to the core of how the economy is run, more offline industries are being affected, whether it's prop tech, fintech, health tech, ed tech, retail tech. All these areas are being impacted. And then studying how other countries are managing such transitions provide a lot more fruitful conclusions and interesting insights. So as such, if one team can invest in multiple geographies and people share that knowledge more effectively, makes sense. At the minimum, what we're seeing is that at the early stage level, it's more localized. But at the growth stage level or late stage level, it's increasingly very global. One team share data with each other, looking at a global basis. Whether it's Tiger Global, whether it's Code2, even the likes of Excel, more and more people are Lightspeed and GGV are doing that. And I think that the whole venture market is bifurcating from the local funds that are investing early, raising SPV to double down their portfolio, to the global funds that have presence around the world, increasingly have at least one team at the growth level to look at all the markets from one setting. Therefore, you can compare data better and interests are aligned better.
Got it. And Hans, when you talk about the journey from startup to IPO, right, is it a straight line? And, I've specifically heard you speak about a firm in this context. Or do you see the team having to adapt and be flexible to find the market fit? Because I think what we're seeing is that in the midst of the pandemic, right, finding that right fit, the right product, for example, co-brand working or video KYC working for us. It's required a really flexible and agile mindset. How does it work in this journey? Is it a straight line, or is it, just adapting to change?
That's a great trick question. I've never been with any company that's a straight line that went from zero to IPO, as you know. And so what we have seen is that constantly it has to evolve. Even for example, even with the case of Xiaomi, how to crack international market, how to brand internationally, how to figure out a way to not just sell online but offline with the Xiaomi stores, how to build out the ecosystem so there are more other companies designing products for them to sell inside the Xiaomi store. They went through many iterations to where it is today. Now going after EV, and you look at in the US, even the likes of Airbnb, when it first started, the first 2 years, nobody wanted to invest in Airbnb. The name had a different name altogether, and so everybody had to sort of evolve and innovate along the way, because it's just not a straight line. When you're taking on the offline economy and with lots of incumbents, you need to figure out ways to stay nimble and constantly come up with new innovations faster than incumbents do. So that's just the mantra we always sort of share with our founders. And at the beginning of the pandemic, 18 months ago, we weren't sure what the impact would be, but we learned that from our investment in Asia as a global player, that Alibaba, 95% of the market cap of Alibaba today came after SARS, after SARS broke out in 2003. So when there's challenges, there's usually be opportunities, and the best founders, smartest founders, figure out a way to innovate, like what you guys did during COVID.
Right. And Hans, you have a famous speech called The Next Billion, right? And you're talking about identifying the next billion. And you're talking about the UberX of the industry you're in. And, when we think about financial services, there's so many people who have less than required access to credit. They're underbanked. How does one go about creating this kind of UberX experience for the fintech space? What are your views on that?
Yeah. You take example of Robinhood, even though it's not our portfolio, making trades free now, potentially even into Bitcoin, crypto, make those trades free. Finding out ways to make the transaction very accessible, the price point to be extremely accessible for the mass market, over time generate a lot more volume. And when we have so much volume, even if you take 0.1% of that for any kind of reason, you end up generating quite a bit of revenue. So that's the model that we have seen work in Beijing, Shanghai, and Shenzhen, and that's the model we saw working in Seoul, even before the rise of a Tencent Alibaba in the case of Cyworld. And so you see these companies going after the mass market, and those lessons are extremely meaningful for emerging markets around the world. So that's why we spend time looking for where's the billion users come from, who are the ones that can provide that access to them, instead of charging high ARPU, going after only the top 1%, 2%. You have the middle 50% or the bottom 70, 80%. You're going to build a much bigger business over time. You may not be as sexy as an iPhone, but the smart shoppers, like many of them in India, says, it's overpriced, doesn't make sense. I'm going to find a better deal elsewhere that's offer affordable luxury at much better price points.
Yeah, I completely resonate with that, right? Because in order to create these smaller products for people who otherwise are not able to access credit, we've had to go and bring online lenders who don't otherwise have a digital capacity, but have a balance sheet, have an understanding of risk in lower income, but essentially to partner with them to bring them online. And that, I guess, is what you're calling collaboration and the democratization of access to finance, right, Hans?
Yeah. Even a firm did that. A firm partnered with the bank in order to offer financial products to merchants and consumers, and they're not a bank themselves. But by partnering with much smaller banks who otherwise don't have a digital strategy or don't have that digital presence, don't have that user base, but has the FinServe license and the domain knowledge, can allow better collaboration. So we will definitely see that more and more happening in other emerging markets too.
Yeah, fantastic. And BNPL is obviously hot everywhere. You took a firm IPO. What was the biggest excitement for you about the way a firm went about doing it?
Well, the credit goes to Max and the team and some of the early investors that from Lightspeed and Founders Fund and who made that work. It's just I remember meeting Max back in 2009, 2010. He was at Slide doing web gaming for Facebook. And it's just like, maybe it's a good way to make money at a time to ride the Facebook wave, but it's not what Max is calling. That's not what he's on this earth to do. He's a fintech person at heart, and figuring out mass affordability and changing lives of tens, if not hundreds of million people. That's what he's here to do. And look where PayPal has gone. And look at Affirm in the early days, it wasn't as clear if Affirm will be truly differentiated. You can argue that other players, whether it's PayPal or Square, can end up doing something similar. But they continue to figure out a way to partner with the right strategics who needed more fintech expertise on their massive user base, whether it's the case of Shopify and Walmart, and today, very recently, Amazon. So by partnering with others, continue to have more data points than anyone else, and perfecting the risk model in a way that harder for others to compete. They built that barrier with data, the amounts of data to be able to come up with more prediction that's more accurate and able to assess risk better. So all that just to show you that as a startup, staying nimble and at the right time have the right strategic partnership, giving access to more data than anyone else. Not just focus on your own direct reach to consumers, but helping others succeed first. Over time, allow Affirm to go direct, have their own app. Now, over 1/3 of the GMV transacted by Affirm network come through the Affirm app itself. So all that is sharing with founders, be patient, help others to succeed first. Once you have more data than anyone else, you can be able to offer more accurate solutions at more affordable prices for the mass market, and a positive flywheel and feedback loop begin to emerge, and that's how you would be.
Makes sense. Now let's talk about the next topic, which is making the IPO work. Now, you've recently seen multiple of your portfolio do this well, right? Affirm, Wish, Poshmark. And you also give credit to the existing investors at Affirm. Now, for example, at Bank Bazaar, we have Amazon as an investor, we have 8roads as an investor. What role do you see existing investors playing in the path to a successful IPO?
I think that the investors who understand the industry, understand the sector, and have seen patterns and multiple data points over cycles are the ones that, one, lends credibility, and two, can offer shared knowledge and insights that are helpful to navigate. Many founders are doing IPO for the very first time. Max is more of an exception, but many more are going through the first time. And as a result, having someone on the board who have gone through it and have credibility to the broader market, that the investment banks know well, the public investors know well and appreciate, makes a huge difference. And for GGV, we have had 17 IPOs, 18 IPOs in the last 24 months. That really helped to make more people realize that we know what we're doing and we're scaling well. So throughout the process of IPO, you want to have investors who have been through this a few times already, and the firm who have went through it many times to help you to avoid some of the pitfalls and mistakes.
Right. And, I know that GGV is organizing a webinar on, taking a company successfully IPO. And I know this is just a 30-minute show, but if you were to offer us one pro tip, as Indian companies think about working towards IPO, what would that one pro tip about having a successful IPO be?
Right. The role of CFO is extremely important. Having someone who understands how to internally have the right team in place on compliance, on FP&A, financial planning analysis, on control, position of controller, to be sure that accounting is done correctly and regularly, is extremely important, because you don't have the ability to recall numbers, find numbers, show analysis to public investors. It makes it a lot harder for them to have trust in what you're doing. And we see that companies who go through the IPO phase kind of forget that, hey, I've raised money from many funds over the last 5 years, 8 years. I've dealt with multiple rounds of financing. IPO is just another one. No, it's different. A lot of public investors really want to understand how they're going to make money at the time of their entry. Not that you have done great over the last 5 years, but where you're going to go from here. How they going to be profit from your further value creations. So having that mindset that I'm starting yet again, with a new set of people who need to get to know me is important. That's why you see a lot of companies don't do as well the first 12 months as a public traded company, because people want to see track record. They want to see things being proven, not just because you say so, just because you worked with it before. They don't always agree that it will definitely happen again in the future. So that's something, those are the two things: having a great CFO and have a mindset that you're starting fresh again with a new universe of investors is extremely important for the CEO.
Right, great answer. And Hans, a lot of companies in India are excited about tapping the public market, about going IPO. But tell us what's beyond a successful IPO, right? So, once that's done, is it a start, or is it what happens in the beyond the IPO?
That's a great question for my partner Glenn Solomon, who went through the experience of Square. He invested in Square when it was $800 million valuation in 2011. When by the time it went public, Square went public at a price that's lower than their last equity round. So it was in the billions range. And then today it is a close to $100 billion market cap company, and actually more than 100 billion now. So you see that happen. But the first 2 years of Square was very tough. People trying to understand, it's just a POS terminal business. How interesting could that be? They need to be convinced that there's a foundation for a lot more value-add services, that Square Capital and Cash App can grow, become massive. It wasn't obvious to this new set of public investors back in 2014, 2015. But over the last 6 years, you see that has done well. And the founding general manager of Square Capital, Jackie Reeses, is both a GGV investor as well as on the boards of Affirm, Nubank, and Wish. So you see what she has gone through and building that business. You see examples in other companies, how PayPal, after split off from eBay, ends up becoming a much bigger company than eBay. That just tells you that if you do this right and you have the mindset that, hey, this is the beginning of something else, this is just an IPO, just a milestone. Even worse, it's just the beginning, the starting point again for the next phase of growth. You can build a much, much bigger business than when you were IPO post.
Great answer. So now we're coming to the last couple of minutes, Hans. It's been a pleasure chatting, but I want to focus a little bit about, thank you for making time for this. Now, I know you're passionate about, adding value, sharing knowledge, helping entrepreneurs and people around you. I've also seen a very interesting, seminar you've done at Stanford, where you went and spoke about your experiences. What's your view on adding value, and how do you approach it as a busy investor? You have a lot of things you're doing, but how do you make time and how do you approach adding value to communities?
Sure. I mean, for example, next week we have our own internal big meeting, so we're all preparing for it. So I apologize for being late to your session, but what I learned is that when I went to China as a Taiwanese American, I wasn't born in China. I didn't grow up going to colleges in China. So as someone who's essentially a foreigner in China, how do I relate to founders, or have founders be able to relate to me? And what I learned is that if you're there to help people, you think long term. You're not trying to make most of our money on your next trade, but you are someone who can delay your own gratification, and you're long-term greedy, and you're able to build a better ecosystem, then you'll get more credibility. People will understand you better and see the value you can bring, and therefore allow you to invest and be part of their growth. So it's a privilege to be part of somebody else's pursuit of their dreams, and that's how we treat it. And so whether you're looking at a sort of an economic basis, or just something that's just a better way to live, have more fun, to see everyone else succeed too, instead of your own self succeed. That no matter which lens you look at, the much bigger future, more impactful outcome that can share by more stakeholders is healthier, and it's stronger, and it's just a better way to do things. And so this is why if you think like that, you're grateful for the opportunity to actually be an investor, to be part of someone else's pursuit of dreams. You approach your job differently. And so in some way it is a form of service, and but we try to create as much of a win-win situation as possible. And increasingly even though for geopolitical reasons, there's a rise of sort of people focusing on their own community and their own things. I always find that being global and be able to connect with people from different backgrounds is much more rewarding life. So even though the absolute quality of life may not be as good as just covering multiple geographies across multiple time zones, like you are doing now at 9:30 India time, to be able to do this live broadcast to everyone around the world. When you see a young founder in Sao Paulo, in Bangalore, in Jakarta, and being excited about something that they heard on your show or from our content, that feeling of connection is unbelievable. And it's why I love getting up early in the morning, 5 o'clock, 6 o'clock, 7 o'clock, to do all this, because that you know you're making positive impact to the world around you, and that makes gives life itself a lot more meaning than it otherwise would have been.
Thank you so much, Hans, for sharing your insight. I think you're a special, global-minded investor. And I, as an entrepreneur, have really enjoyed hearing you. And I think I've learned from our interaction. So really appreciate you making time in your busy schedule. And I hope everyone who's listened gained from this expert speak with Hans. Thank you so much.
Thank you for all your work, for everything you do. You're adding a lot of value, not only to India, but also beyond. So appreciate your work as well. Thank you.
Thank you, Hans. Thank you.